Hello everyone, this is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Tuesday, March 10th. We're going to take a look at the markets the way we usually do on the our weekend update nights. And then we're going to take a look at 5 stocks tonight: Facebook, FireEye, First Solar, Goldcorp, and Candy Technologies. Okay, we'll start off here with the Dow Industrials. The Dow was down 332 points today, so another big, huge down day, and it actually was bigger than Friday, so this day here. A couple of interesting things. Friday, the advances versus decline. The declines outnumbered advances 5.5 to 1, so there are 5.5 stocks down for every one up. Today, on a bigger down day on the Dow, it was literally half that, 2.66 stocks down for every one up. So the breadth of selling was not nearly to the degree, even though we had a big down day. So I find that interesting. The other thing that I want to point out here is that we've had, what's the percent retracement of this move? Okay, we're right at 50% on the Dow Industrials. Okay, so 50% pullback of this move here. So right now, I mean, we could have something else going on. I keep looking at the charts, the wave count, and everything else. You know, and until the market tells us, and until some major light goes off in my brain that tells me there's some other picture going on here, I've got to keep staying with this count that I talked about last time on the weekend, which is this, you know, 1 2 1 2 1 2 type of count. Now, you know, the second wave on all of these has pulled back pretty substantially. You know, if you say this was the first wave here of minor wave 3, well, it pulled back pretty deeply, almost to the, you know, the start of the wave 2. Okay, and so now we're getting another deep retracement. What's the retracement here on the S&P 500? It's a little deeper than on the Dow, just slightly over 50%. So I would say like 53, 54% of the move up has been retraced back down. So now we'll see what kind of follow through we could continue to get out of this. Let's take a look at the Nasdaq. Not nearly the damage, although we did get this big gap down today. And as you can see, the Nasdaq has not even come close to retracing to the degree. It hasn't even gone 38% yet in terms of the pullback. A New York Composite, actually one of the weaker again. You know, we thought we had this really strong move now. You know, it was kind of breaking out here, and then all of a sudden we're getting this weak pullback. But it's pretty deep. But again, like I just said, we've been getting these deep second wave pullbacks. This is beyond 61.8%. Okay, so here's the 61.8% line. So this has gone deeper than that. And let's see if I can get rid of that. Nah, I can't right now. Let me do this. There we go. Okay, so, you know, I don't see any reason to change the wave counting here, although I'm constantly looking and reevaluating and trying to see if there's something else going on. But this is my best assessment of what's going on. I mean, this looks, you know, this kind of a coiling type triangle. But, you know, from an Elliott wave perspective, triangles occur in either a B wave or a fourth wave, and I don't think we have either one of those going on because we're pushing to the high side. I mean, we went higher here. Okay, you know, there for the longest time we did not get new highs. You know, we had this July high on the New York Composite, and the intraday high was here, and we didn't take it out here. We didn't take it out here, and then, you know, and then we take it out and push to, you know, newer highs. Well, you're not in a decline if you're moving to newer highs. So that's why, you know, we've got to sit back and that's why I've got the count that I've got. And so we're just going to stay with that for now until the market tells us something different. The Russell 2000, it didn't, you know, remember I thought on Friday that maybe we're going to hold, you know, get some support in here. Well, it pretty well smashed right down through that support today. We'll see whether or not the 55-day moving average kind of brings in some buying. And where is the 55? It's right near where this high and this high was before. So if I draw a line across there, these previous peaks, kind of right in the middle of that consolidation. Let's make that a dotted line. Okay, so right in the middle of this consolidation, we'll see whether or not we get some support in here right at about the 55 on the Russell 2000. Okay, short-term trading index. Okay, we had a big reading today on the trend. We've had a couple of deeper readings. December and here at the end of January was January 28th. Okay, and there haven't been too many readings in the last year that are that high. Okay, now see this one I've got circled over here. This was the end of the January down move, January 2014. Okay, so there have only been 3 trend readings, one-day extreme trend readings that have been higher than what we had today. And the 10-day moving average is creeping up almost to that overbought level. Now, I'll say that if you go back and look at 2011 or 2008 and some of these where you start getting a lot of selling going on, we're going to get a lot deeper, higher readings on the 10-day, and we're going to get clusters of big readings up in here. But in the bullish mode that we're in right now, this is going to be interesting to see if we get a short-term bottom in here, coming in here soon. We're kind of creeping up to that, right where we were on January 28th and where we were on December 10th. And where was January 28th and December 10th? And let's see. Well, December 10th was right here, and we had a little more selling to go. And January 28th was right here, and we had 2 more days, and then we turned around. So it's hard to tell, but again, just signposts along the way that we're trying to get a reading. The VIX has popped up here to the 55. Looks like it's spiking up, but again, we're not getting really strong bullish moves, like over in here and here. And so I'm really kind of wondering about that. Although this was a big gap up move on this. High-low index has dropped down below 0. It's actually at a lower reading than we had in January. So we've broken down here. We're not even close to as low as we got in December or October at the bottom in terms of the net high-lows. The other thing I wanted to go back to the McClellan oscillator, which is on the New York Composite. That's where that indicator is. And that is now down here at minus 191. And so we're definitely in the oversold territory. And we're getting down to where it was in December. And we're down to where it clustered in September, October. So we're down in that oversold category, and again, that's just something to just kind of give us a sense of, what's the neighborhood that we're operating in right now. It doesn't necessarily mean that, okay, there's going to be a rally tomorrow. Let's see. I think that's it on the indicators. Let's move to the high yield bond fund. Take a look at it. Now, it has continued to pull back, which is exactly what you would expect. Risk off when the market's declining, which is basically what everybody's saying. We're not buying high yield bonds. That's risky. We're selling the stock market. That's perceived as riskier, etc. And so, but what's interesting is I extended this trend line on down, and it looks like it's pulled right back to this trend line. So now it's going to be interesting to see, do we get a bounce in the high yield bond fund coming off of that trend line? And the next one is the TLT, the bonds, treasury bonds, long-term 20+ years. This also had a rally today. So that means interest rates dropped today. And the interesting thing here is on the RSI, we're getting bullish divergence coming in. It actually came in here on this Friday, Monday type of move. And we're seeing it here on DI minus. So this did not confirm the move to the downside. The demand index isn't quite confirming it yet, but 2 out of 3 are. And then we've got this downtrend line. We'll see whether or not it breaks it and snaps up, say back up to the 55-day moving average or so. We'll have to just see what kind of reaction we get. And then the dollar index continued its very strong rally today. Look at this huge move. Okay, so remember coming out of this consolidation I talked about. Now this is so the dollar against the euro and all of the other currencies, the dollar is just really strong. And so I've been waiting for oil to continue its collapse because of this, because we talked about the how it's been in sync with doing that, and finally it's broken down out of this consolidation. So you can see this is the dotted line at consolidated move that we've been talking about, and now it's finally broken down out of that, and we'll just have to watch to see, does it come on down, and I would guess it's going to try to retest this low, and whether or not it takes out the low is what we're going to be watching for. So let's see, that's dollar, and then gold is the last one. Well, gold, here we go, GLD. So GLD has continued down. I don't know that there's any change in the picture. I talked about this on Saturday. I don't have any different perspective. We take out this low, and it's just kind of confirming that we are in a bigger wave 5 than what this was anticipating or thinking we were in. So we'll have to see whether or not that's what happens. All right, let's move over and take a look at Facebook. Facebook is in this huge sideways consolidation. It looks like a head and shoulders to me. Okay, I've been watching this, looking at this, and let's see if we're getting some divergence on this right shoulder. Yes, we are. Okay, so we're getting divergence on the right shoulder. We're getting divergence 2 out of 3, and we're getting divergence 3 out of 3 indicators. So I was really looking at buying puts if we close below this low here. But then when it continued to sell off and dramatic in here, it makes me a little nervous when we've had 3 big moves to the downside. So basically we've dropped in the last 3 days from 81.21 down to 71.55. So what I'm watching for, I'm still kind of negative on this by the way this is acting with the divergence, etc., and this picture. So I'm looking to see if we get a pullback, kind of bounce back up in here, and then I'm going to be looking to buy puts, and that's what I'll be talking about in the trade ideas, where we post the details of our trade ideas on the trade ideas webpage on the website. So that's where those details are, and if you're not a subscriber, it's easy to do. First name and email will get you access to that on a regular basis. And then let's see, FireEye is the next one I wanted to look at. FireEye. Now this is one I was waiting for a pullback. I talked about this one and Apple. Both of them have continued to sell off, so I see no reason to get back on board yet. It's not acting like it's ready to go back up, but that's what I'm waiting for. We'll see whether or not we're going to get a continuation to the high side. And actually my perspective on Apple has changed a little bit, and I reevaluated the wave count. So I'm not quite as strongly looking for getting back on board with Apple as I am here with FireEye. I'm kind of wondering whether or not Apple has run its course. So we'll see. We'll see what kind of price action we get. And the next one is First Solar. First Solar, is super strong. We talked about how there was potential resistance where selling came in here because of this previous low here. And selling came in, and we've pushed above it. We've pulled back down kind of to it. So, that's showing really nice strength. And of course, this huge volume, this big move on this gap. Now, we could pull back to the top of the gap, and then I would expect that the buying will come back in, and maybe, just because this is so strong. Now, if that failed, that would be a pretty weak sign. But this has gotten so overbought. Look how overbought this is. 88 on the RSI. And this is a 10-day RSI, by the way. It's what I use. But still, very, very overbought, strong. This is confirming a strong move. This isn't, to me, saying, oh my gosh, I should be buying puts and selling this. That's not what I'm thinking of doing at all. I'm looking to see, do we get a pullback and something sets up to get back on board? I mean, it looks like a strong trend. So right now, First Solar is looking like it is in bull mode. And let's see, Goldcorp. Goldcorp is basically kind of in sync with GLD. I mean, this is, look at these 3 days here outside the Keltner channel. I mean, they're just tracking right on down. You're outside the Keltner channel. You know, we kind of did a sequence like that over here, and then you pull back in, you go sideways, chop a little bit. So, and we'll see what kind of action we get and whether we take out these lows down here. Let's see if I can't draw a line across the bottom. That's going to be pretty critical that it doesn't get down there and break that if this thing's trying to turn around. Now, again, we got to look at this and say the 55 is below the 233. The short-term trend is to the downside. The long-term trend is to the downside, and the intermediate term is about to go negative. The 21 is diving down hard. So if I call those trends based on the moving averages, that's we got 2 out of the 3 still to the downside. So, all right, and the last one we'll take a look at tonight is Candy Technologies, which we hadn't looked at in a long time. Or I haven't looked at in a long time. And I was getting really bullish on this. I thought that maybe it had run its course with 5 primary waves up. And so I thought it had completed a strong impulse cycle wave 1 to the high side and was now correcting. And I thought we were getting a support at the bottom of wave 4 in here. And it looked like we were getting a WXY, kind of a complex corrective action that I thought was completing in here. And I was looking at this wave 1, minor wave 1 up, and then a 2 back. But this 2, this is not impulsive action to me. But it could be something else. I mean, 2 could be just kind of moving sideways here. We could have completed here. This wave count isn't totally clear to me. You could make the case that if this is 2, let's see if I do something. If this is 2, you could say, well, okay, maybe we have a 1, 2, a 1, and a 2, and a 1. You know, a series of 1, 2s, 1, 2s. But I don't really like that. You know, it's just, that's kind of messy. So I'm not really sure whether we're getting a 2 in here. We're just gonna have to watch this now. Just from a pure price action, look at this consolidation that's going on here. Okay. And you've got the 10 above 21 and 21 above the 55. So the short term and the intermediate term are trying to turn to the high side. I kind of like this. We get a breakout of this. You could break this downward trend line here, and it might be off to the races out of that. So watching this pretty close from a bullish standpoint, we get a breakout of this, and then especially breaking this trend line, I think there's a good chance, you know, where's the next point that it would stop? You know, and the next point up here is 1817, and the next pivot point up here is 2118. So that's what I would be watching for on Candy Technologies. Okay, the last thing I just wanted to mention is I am going to have a video out tomorrow. Try to get it out in the morning, first thing in the morning, ideally, before the market opens, on Rite Aid. RAD is the ticker symbol. So I'm going to take a look at that. I haven't looked at that before and had a request from one of my subscribers to take a look at that. So I'm going to do that. And we'll look at the weekly and daily chart for that stock and see what's up with that. All right, this has been Joe with Beyond the Chart, and we'll be back, 2 days? Thursday. I'm losing track. What day is it? Yeah. All right, I'll be back in 2 days. Everyone have a great Wednesday, Thursday, and thanks for stopping in.